Get some instant reaction to the Bank of America earnings. We are very pleased to welcome Charles Peabody, of Peabody of Portales Partners. Charles, we were expecting Bank of America to come out at 7 o'clock. They're here a bit early, so we are delighted to have you for the instant analysis. We're really putting you on the spot here, but based on what you've heard and seen, what do you think of this report?
Well, the revenues were in line with expectations, but the bar had been set pretty low. The expectation of earnings being generated through improved credit quality was also there because of what we saw at Citi and JP Morgan, largely driven by probably credit card improvement. You know, the bottom line number is certainly much better than anyone expected. There are a lot of unusual issues in this quarter. I'd like to know what the tax rate is, because they definitely benefit sometimes from tax benefits. I'd like to know if they book big debt security gains. There are things like that. If they had reversal of bonus accruals, those are the type of things that could have boosted the bottom line relative to our expectations.
Charles, worth asking you about one of the big swing factors this quarter, trading. I'm just looking at the numbers right here. You may not have seen them yet. Bank of America says fixed income, commodity, and currency trading revenues were $3.5 billion. Equity trading revenues were about $1 billion, right in line with what we heard from Citigroup yesterday. Is this better or worse than you had expected?
Well, we had expected the fixed income trading to be flat to down, and then the equity, because they had such a weak second quarter in their derivative book, to be up. So it sounds like it's a little bit better than what we expected.
We're getting some details as well about the capital ratio. Total Tier 1 capital ratio does seem to be going higher. I want to know what you think. Also, I'm just getting another headline here, of course, benefiting from this idea of the lower credit cost. You alluded to what we saw already earlier this week from one of its competitors. How much of this credit worry is there over your head for Bank of America?
In terms of the foreclosures in the mortgage space?
Yeah.
You know, I think it's been overblown, the issue, in terms of the potential cost. I think it's going to be incremental. And in terms of the actual foreclosure delays, I think the costs are going to be in the hundreds of millions, not billions. But in terms of the litigation that may arise if this becomes very politicized, that could be in the billions, but not tens of billions. So I think it's a very manageable process. To put that in perspective, if I may, using JP Morgan, because they reported their numbers, they're absorbing about $5 billion a year in mortgage charge-offs, another $2 to $3 billion in rep and warranty charges, another billion or so in litigation and OREO charges. So you're talking about $8 or $9 billion of charges are being absorbed, and yet they just reported, you know, on an annualized basis, $17 billion of earnings, which is their second best quarter ever in history. So I see these charges from this foreclosure mess as being incremental, not detrimental.
Charles, a couple of other numbers to throw your way. Markets, global banking and markets revenue, which includes those trading results, reporting net income of almost $1.5 billion, a big jump from the sort of $930 million we saw last quarter. Given all of the concerns swirling around that business in the third quarter, does this in some ways validate what we've been hearing from Brian Moynihan for months, and before him, that the Merrill Lynch acquisition really is paying off for Bank of America in ways that shareholders still fail to recognize?
Well, I do think that the Merrill Lynch acquisition is paying off. But I want to be careful, because that second quarter was so weak. You had big hits in the equity derivative book. You had losses in the commodity book. So the comparisons were pretty easy.
Well, what about the cultural? I mean, even if it's working on paper, do you have any sense of the cultural integration? I mean, I still know a lot of bitter Merrill Lynch people.
Well, anytime you bring an investment bank and a commercial bank together, just because of the huge gap in salaries, there's a cultural problem. But I think the industry's overcome that over the last decade.
All right, so you don't see that as posing a problem for the leadership or for the integration, the way that the company functions going forward?
I don't. There's always friction, but I don't think it's going to be detrimental to the long-term success of that franchise.
All right, Charles, listen, thank you so very much for coming in. I know you have a lot of work to do digging through these numbers and getting to your clients. Charles Peabody of Portales Partners, instant reaction to Bank of America's way better than expected earnings.